All right, let's dive into some seriously interesting stuff today, huh? We're taking a deep dive into Varun Beverages Limited. VBL,
Yeah, Pepsi, Mountain Dew.
all that.
Exactly, the whole shebang.
So if you're thirsty for some knowledge on this global giant, stick with us. We're breaking down their Q3 and 9-month results for 2024.
Yeah, and let me tell you, the numbers, they're pretty impressive.
So what really stood out to you? What's the big headline?
Well, the first thing right off the bat, revenue growth.
Mm-hmm.
They had some serious challenges too, like heavy rainfall in India, and that's their biggest market.
Yeah.
But even with that, 24.1% revenue increase for Q3.
Whoa.
That's big.
That is huge.
Yeah, and then for the first 9 months of 2024, solid 22% growth, reaching a massive, RSS 163,188.6 million.
They are chugging along, that's for sure. Even with those, what you call them, weather hiccups.
Yeah.
What do you think is driving this growth?
Well, a few things. One, they've been smart about expanding their distribution, getting their products out there, more places, more people, more hands.
Wider reach.
Makes sense.
Yeah, and strong demand in key markets.
Yeah.
Africa especially. Oh, and we can't forget their acquisition, BevCo in South Africa.
Yeah.
It's definitely helped their bottom line.
BevCo, yeah, they're always making these strategic moves. Didn't they just open a facility in the DRC too?
They did, and it's already running full steam ahead.
Wow.
3 shifts, full capacity. They're not messing around with this global expansion.
No, they are not. So bigger reach, new markets, and it's showing up in their top line, clearly. But what's going on behind the scenes? What about expenses? Have those been going up too?
Well, yeah, like most businesses, they've been dealing with inflation.
Sure.
Cost of materials, for example, up 13.2% over the 9 months.
Oof, that's gotta hurt.
Yeah, but, and this is a good sign, their revenue growth is outpacing those rising costs. So they're managing it.
So they're keeping costs under control. But what about profit? That's the real test, right?
It is, and that's where things get interesting. Okay, I'm listening. What about their gross profit and margins?
Well, even with those cost increases, their gross margin actually improved.
I'm kidding.
Yeah, Q3, a slight increase, 22 basis points, reaching 55.5%.
Small change, maybe, but like you said, every little bit counts.
Absolutely, especially in a competitive industry like this.
So gross profit's growing, margins are good. What about operating income and margins? Are they keeping those operating expenses down as they grow?
They are, and it shows they're running a tight ship. EBITDA margin, and that's a big one for measuring profitability, right?
Yeah, before all the interest and taxes stuff.
Exactly. Well, that jumped 117 basis points in Q3.
Seriously?
Yeah, up to 24%.
That's a big jump. So top line's growing, costs are managed, and profitability is looking good. They're hitting all the marks. Now, tell me about the bottom line. What about net income?
All right, this is where VBL really shines. Net income, or profit after tax, surged 22.3% in Q3.
Wow.
Hit R is $6,288.3 million. And for the 9 months, a similar increase, 24.5%, reaching R is $24,386 million.
Those are some impressive numbers. Revenue's up, profitability is strong, and their net income is through the roof. Sounds like they've cracked the code. But what about cash flow? How healthy is that?
You're right. Cash flow is king.
Absolutely.
And to get a good look at that, we got to dig into their balance sheet.
Sounds good. Let's crack it open and see what we find.
Okay, so let's take a peek at VBL's balance sheet. Get a handle on their finances and that cash flow.
All right. What's catching your eye?
Well, their debt levels, for one. They've taken on a decent chunk, especially with BevCo and all the new facilities.
Yeah, debt's always a bit tricky. Can help you grow, but adds risk, too. What's the situation with VBL? Are they overdoing it?
Well, looking at their debt-to-equity ratio, it's sitting at 0.7 right now.
For every dollar of equity, they've got 70 cents of debt. Is that a red flag?
Not really, no. For a company like VBL in a growth phase, good cash flow, 0.7 is pretty healthy.
Okay.
It means they're using debt strategically, fuel the expansion, but not go overboard.
Smart. So they're balancing that growth with a solid financial position. But they are going for that big fundraising thing, right? That QIP.
Right, the qualified institutional placement.
Yeah, that one.
Yeah, they're aiming to raise a bunch of capital up to Rs 7,500 crore.
Wow.
Growing to the big institutions to fund those ambitious growth plans.
Okay, so raising capital, managing debt, good cash flow, all pointing in the right direction. But what about the future? What's their outlook? What are they saying?
Well, they haven't given specific numbers, but their chairman in the presentation, he sounded optimistic.
Good.
Talking about healthy growth in both India and internationally.
So more growth on the horizon. Exciting. But, I mean, there's always challenges, right?
Oh, absolutely.
Yeah,
Inflation, currency fluctuations, and the big one, competition. That beverage industry. It's a jungle out
it
there.
is. It is. So how does VBL stack up against the others? What's their market share like?
Well, they didn't give specific market share numbers in this presentation,
Hmm.
but we know they're dominant in India. Over 90% of PepsiCo's sales volume in the country.
90%. That's a stronghold.
It is. And globally, they're the second largest PepsiCo franchisee outside the US, so they're a major player.
Impressive. So besides just size and market share, what are those key ratios that people look at, the numbers that really tell the story?
Right. There are a few. Return on equity, or ROE, for example.
Hmm.
VBL's consistently been in the double digits there, which is good news for their shareholders.
Yeah, ROE, that's a big one.
Yeah,
What about other ratios, inventory turnover, things like that? How efficiently are they running things?
absolutely. And those are important too. I don't have those specific ratios offhand,
Sure.
but those are definitely worth a closer look. Dig into their financial statements, and you'll get a much clearer picture of their efficiency, their overall health.
So we've covered a lot. Revenue growth, debt, cash flow, all those key ratios. But I'm always interested in the bigger picture. What does VBL's success tell us about what's happening in the beverage industry as a whole?
I think it highlights some big trends for sure. One that really jumps out is that demand for healthier options. Consumers are getting more health conscious, right?
Definitely.
And companies like VBL, they're responding. More low sugar, no sugar stuff.
It's everywhere. Food, beverages. Everyone wants healthier choices, but they don't want to give up on taste.
Exactly, and VBL's doing a good job there. Remember we said almost half their sales are from those healthier options.
Yeah, they're definitely paying attention to what people want.
Absolutely. What else? Sustainability, that's another massive trend.
Big one, yeah.
Consumers care about that stuff, want eco-friendly, want companies to be proactive. And VBL, they're ahead of the curve there.
It does seem like everyone's talking about sustainability now.
And VBL's not just talking. Water conservation, renewable energy, recycling, they're doing it.
Yeah, their goal for 100% PET bottle recycling by 2025, that's ambitious.
It is, but it shows they're serious about this.
Yeah.
Tackling that plastic waste problem head on.
For sure. So they're building sustainability into their growth, which makes sense. Investors are looking at that stuff now, too.
Oh, yeah. It's a big factor in a company's long-term value. So VBL's proving you can grow and be sustainable at the same time.
Powerful message for other businesses.
It really is. You don't got to choose profits or purpose. Do well by doing good. VBL's a great example.
Couldn't agree more. It's been a really insightful look into Varun Beverages Limited. They're clearly making waves, not just the numbers, but the whole package, sustainability,
Yeah.
values.
Yeah, a company to watch, for sure. Not just for what they're selling, but for how they're doing it. Business can be a force for good.
Absolutely. That's what makes these deep dives so interesting. It's not just the financials, it's the bigger story, what they stand for, what impact they have. So until our next deep dive, keep exploring, keep asking those questions, and keep searching for those little bits of knowledge that make our world a brighter, more interesting place.